A lot of you guys were asking about me making a video about my strategy. So here it is, guys. I'm finally making a video about my strategy. Guys, my strategy is super and simple and it's super easy to run. It has close to 70% win rate, but I always have a 1 to 2 or a 1 to 3 risk reward ratio. So the risk reward ratio is super good and the win rate is also super high. So in this video, I will explain everything about my strategy. It's super simple. This video might be like 40 minutes or 1 hour long, and then we will even go and backtest for a whole week and how my strategy would have played out. So here is the basics over here. I basically, guys, trade draws on liquidity. I only trade draws on liquidity, draw on liquidity. Now, if you don't know how to identify draws on liquidity, let me know in the comments because I don't want to go through that in this video because the video will be super long. But there is a bunch of other video that people are like talking about how you can identify draws on liquidity. I trade draws on liquidity plus session, okay, plus session high and lows. That's it. Draws on liquidity plus session high and low, and then it comes to like 5 minute order flow change or 3 minute. That's it. This is my whole strategy, guys. This is nothing more. My strategy is super simple. I just wait for draws on liquidity to be taken out, and then I like or session high or lows, and then I wait for a 5 minute order flow to change or a 3 minute order flow to change, and then I just take my entry. Now, it's not that simple to be honest, because you do need to have some market experience, and I even sometimes I even use like 1 minute time frame. So sometimes I do use 1 minute time frame as time frame entry because let me explain why I did it. So sometimes there is that in the market when we take out the session high and lows, there is no like 5 minute fair value gap or like a 5 minute. Like I don't usually wait for 5 minute like break of structure. I love to see a 5 minute inverse fair value gap to change the order flow or a 3 minute inverse fair value gap. So let's just put this in kind of like inverse fair value gap here or a 3 minute inverse fair value gap. That's what I actually love to do. But if you get a 5 minute break of structure, that's cool. But most of the time when market opens, there is a big move to the downside and then to the break the structure to the upside is going to take longer. So that's why I love to use inverse fair value gap. And then sometimes if we don't have, okay, if we don't have 5 minute inverse fair value gap or 3 minute, sometimes 1 minute time frame entry. That's what I use. Now, it's not that simple to be honest because it comes to market experience to also understand like if the inverse fair value gap is valid or not, or when you take your trade off of the 1 minute time frame, is it valid or not? But the strategy that I use is super simple. This is all it is to it. Like all you have to, if you want to learn my strategy over here, all you have to learn is draws and liquidity, session high and low, and then also learn like fair value inverse fair value gaps and fair value gaps. That's super basic. I don't make it super complicated when it comes to my strategy. So this is all I do. Let's go on chart and let me show you guys some example over here. So keep note of this over here. So I will show you guys example over here. So on, let's just mark market opens here on Friday. So let's go over here. So this is market open on Friday. So I actually took this trade live on Friday on my TikTok. By the way, join the Discord server, completely free, link in bio, link in the description. So let's just back test this strategy on Friday and we will do it for the rest of the week. And if you still have any kind of question, let me know in the comments or just join the Discord and you can ask me over there. So coming into the day, what do we have? We have these highs over here, okay? Then what do we have? Like, I think these are London low. Yes, that are London low. London opens at 9. And then we got a bunch of draws on liquidity here to the downside and to the upside. But you guys can clearly see over here, it's super easy. Like coming into the day, we said that this price was never there. It's super easy for me to identify where the draws on liquidity is. We got a bunch of lows to the downside over here to take out. Like we even had this pre-market low. I actually have a trade recap of this when I took the trade. So you guys can clearly see over here when market opens, right? When market opens, we take out this high, which is going to be London high. And then right after that, you guys can clearly see that there is a reversal. So what I trade based on, draws on liquidity plus session high and lows. What we take out a draw on liquidity, strong draws on liquidity here. And then we take out a session high. And then right after that happens, what I wait for? A 5 minute inverse fair value gap or a 3 minutes? So if you go on a 5 minute time frame here, I'm gonna still keep this text over here. So if you look at here, this is what I mean. So you guys can see when this happens, we take out these highs up here. There is no inverse fair value gap for us on a 5 minute time frame that we could actually use and try to enter off of. So what do I do? Since we don't have a 5 minute inverse fair value gap, I'm just gonna use like a 3 minute inverse fair value gap. Now you guys might be wondering why don't I wait for like break of structure? Like we would have break the break of structure would have happened if the candle closed below that, and these usually doesn't give me the best entries or the risk reward ratio won't be there. So now we just go on a 3 minute time frame. If you go on the 3 minute time frame, do we have any kind of inverse fair value gap? Let's see. Yes, we have. We have this 3 minute inverse gap over here. You guys can clearly see this is a 3 minute inverse fair value gap over here, which is super small. And look, where did we inverse that? We inversed these over here. But I remember that on Friday, I actually took it off of 1 minute inverse fair value gap. So let's go on a 1 minute time frame. You guys can clearly see that here. Let's see. You guys can clearly see here that this is actually in line with that 3 minute fair value gap. And then also we had this 1 minute fair value inverse fair value gap over here, or the bullish fair value gap that we inversed. So what at the same time we inverse a 1 minute fair value gap which price always reacted off of that. This is what I mean when I say when it comes to market experience. You guys can see that this fair value gap was holding super strong. I know a lot of people took maybe buys over here to target some other highs, but you guys can clearly see price comes into this fair value gap 3 4 times and respects that, so that becomes a super strong inverse fair value gap for us. And look, we inverse that over here, and you guys can clearly see we inverse this 3 minute fair value gap too. Boom, where do I enter? I enter off of that. Where do I put my stop loss? I put my stop loss above this high. And then what do we target? Guys, I love to personally target a 1 to 2 restore ratio always, and then you could decide to go for a 1 to 3 because this strategy always gives you at least a 1 to 2 or 1 to 3. So for me, I just love a 1 to 2 restore ratio, and that's what I go for. And boom, just like that, you guys can clearly see all the TP got hit, and you could have even moved your stop loss to break even after us taking out this low, and then like this hourly equal low, and this is London low over here. You could have moved your stop loss to break even, but you could always go for a 1 to 2, or even let's say if you went for a 1 to 3 restore ratio, you would have hit that easily. Now, let's backtest the same strategy on Thursday or the day before Friday. So let's go back over here. When is the market open? So let me still keep this text over here, guys. It's super important that you pay close attention here because this is the easiest way that I could explain it for you guys, and I can explain it on chart. So let's go over here and let's see when was market open. So we had market open like somewhere within, yeah, this here. So January, you guys can see 15 Thursday. Let's just do our analysis over here. So overall, the first thing that we have to do, so this is the market open that I marked out. What did I say? We have to identify draws on liquidity. So just looking at this, I think we clearly took out a bunch of highs over here. You guys can see clearly this is like 4 equal highs up here. That's a super strong draws on liquidity for us. Boom, if we take these out, then that means automatically that we are gonna go lower. What do we have to the downside? Let's just mark out London session. Boom, we have this London session over here. Let me just mark that for you guys. Boom, that's London session. So this actually becomes the session low, which we could have targeted. But okay, what do we have over here? Market opens, we take out draws on liquidity. That's the first thing that we do. And this is like not at like even the Asian session. This is like previous day session highs. And this is just a super strong draws on liquidity because this is like equal highs over here. We take those out, then we are gonna 100% reverse off of that. Draws on liquidity, boom, taken out. We scale down to like the 5 minute time frame over here for us. Let's go to the 5 minute time frame just like that. You guys can clearly see here the 5 minute time frame. What do we have over here? We have a 5 minute inversion, like when market opens. Now this actually happened like off of market open. We took out came and took out like these lows. A lot of people maybe longed it, but that's super wrong because this is super strong draws on liquidity, and we reacting off of that on market open is super simple, and the price wants to go lower. So you guys can see over here, 5 minute inverse fair value gap. Boom, we inverse this fair value gap over here. You guys can clearly see this is a like bullish fair value gap. We inverse that. Okay, what do we have over here? Sometimes what you could do is that I personally wouldn't recommend to enter here and put a stop loss above that high because again, that's not going to give you our best risk reward ratio. You could have still hit your a 1 to 2 risk reward ratio over here. You guys can clearly see on PM session, but that would have actually taken super long. So here is something that I would recommend. So most of the time when we actually inverse a fair value gap like this, let me just skip this. Like when we inverse a fair value gap like this, super strong bearish candle to the downside, that means only one thing, bro. A retrace is gonna happen. 100% retracement is gonna happen in order for price to push lower. Okay, what do we have? We inverse this gap. Okay, then we make this bearish fair value gap over here a super big bearish fair value gap. That could mean only one thing. The price wants to go come fill into this at least 50% of it and then go lower. And then this is super easy and simple entry for us over here. You guys can clearly see we come fill this fair value gap and look, we are respecting this fair value gap. We did not close out of it. We did not inverse it. And this second candle closed bearish. And you could have entered off of here, put stop loss somewhere within here. Still just target a 1 to 2 risk reward ratio. You could have gone for, we got a bunch of lows that you could have actually targeted, like a one, just a simple 1 to 2 here, just to these lows, and you would have like closely almost hit a 1 to 2 before like the price reversing and then going lower. But overall, you can clearly see you could have still targeted a 1 to 3 reward ratio and your TP would have still been hit. So that actually puts us 2 profitable days in a whole week with a 1 to 3 reward ratio at least. So let's back test it on another day, the day before this, on January 14th. Let's do that. This is the best way that I could show you guys, and this might give you better understanding how I look when like identify draws on liquidity and how I trade right when market opens. So this is market open here. Let me just mark that out. So we go on a 50-minute time frame. I just put these here. There is so much guys going on since I don't have TradingView Premium here. That's not the market open, bro. Let's see. Market open should be within here. So this is when market open here, guys. This is market open. So looking into this, okay, what do we have? We have still super good draws on liquidity, which are these high equal highs over here. And then what, like me just looking at this, like I remember, bro, I told everyone that I'm bullish, but I would love us to take out these lows over here in order to push higher. Because why, if you ask me? Because look, this retrace happened already. We took out this low, we took out like even this low. We fell into this fair value gap over here, and I said like cool, cool. I want to be bullish. So what do we have? Market opens, boom, we come to the downside. We take out these draws on liquidity to the downside, which is London low, and then we just took out like even these draws on liquidity to the downside. And then after taking out these lows and even these lows, this is like super good draws on liquidity. We take out a bunch of draws on liquidity to the downside, and that clearly means for me that price is gonna go higher. Why? Because we trade off of draws and liquidity and session high and low. We took out session low, London, where Asian was already taken out, which take out a bunch of draws and liquidity. That means only one thing, the price wants to go higher. Now, what are we looking for? We're gonna go on a 5-minute time frame, try to find some kind of entry. So let's see here what did happen that day. Yeah, I can clearly see that day we lost. So you guys can see over here off of that the price wants to react. Boom, we have these. We react off of that. We inverse this 15 5-minute fair value gap. Again, guys, when this happens, as I said in the last day, when this happens, when we have a super bullish closure, inversing gap, then that means we have another big gap over here. Price wants to fill in. Again, 5-minute inverse fair value gap, boom, that happens. We inverse the 5-minute gap. Then we want to wait for this price to fill into this gap. Boom, you have that. Price comes, it fills into that. We did not disrespect that 5-minute fair value gap, and then we have a bullish candle closure here. Boom, we enter off of that, we put stop loss below here, and then we would have targeted at least a 1 to 2 here. This day would have been a losing day. Still, we followed, like this day, we followed our strategy, but we had a losing day because that just happens. This is not a 100% win rate strategy, but it has a super high win rate. Still, everything played out as we wanted. You still followed your rule. I still did that. And we kind of lost, and price just started reversing after taking out a bunch of low. So we only had one losing day. Two winning day, one losing day. That means only one thing. That puts us like a 6% up on the account because we targeted a 1 to 3 score ratio. We're losing 1%. That means we are still up 5% on the account. So let's just keep going and back test that on Wednesday, Thursday. Let's just do that. Thursday, what happened there? This is market open here. Boom, that's market open. Let's just back test it over here. Again, coming into the day, what do we have, guys? We have some strong draws on liquidity here. Let's see, where did I mark? Yeah, this is like here. So you guys can see pre-market, what do we have? We have these highs up here to take out over here. And you guys can see this is like Monday highs or previous day highs, whatever you want to call it. This is a super strong draws on liquidity for us to actually take out. And what do we have to the downside? We have Asia low, and then at the same time we have London low. So that would mean something London low over here. Boom, we have London low. So at the same time, let me just remove this. So you guys can see clearly, draws on liquidity, market opens. On the pre-market, we have already taken out this high. You guys can clearly see that. So that means only one thing, the draws on liquidity has been already taken out for us. So what we do, we go on a 5-minute time frame. What do we have to the downside? We have London low, Asia low, and then a bunch of lows over here, draws on liquidity for us to target to the downside. Then what do? We go on a 5-minute time frame. Boom, just like these. Let's see, that's not the market open. The market open is like here. So again, let me just give this text over here. We have draws on liquidity that was taken out on pre-market, which was these highs. And then at the same time, right when market opens, we come, we respect these, we go higher. I think we made a bearish SMT off of these highs with S&P X 500, I'm pretty sure. And then what do we have over here? You guys can clearly see on this day, there is no 5-minute inverse fair value gap for us to target. What does that mean? We go on a 3-minute time frame. So we going on a 3-minute time frame. Let's see if we had a 3-minute inverse fair value gap. And you guys can clearly see that there is not a 3-minute inverse fair value gap either. For us, that could mean only one thing. We have to go off of the 1-minute time frame. Now, let's see if we can find that day here. That puts it over here, yes. So over here, you guys can see what do we have? We have this inverse fair value gap. I wouldn't recommend that you enter off of like the first inversion. Then we have another big inverse fair value gap over here off of 1 minute. If we have like we have two inverse fair value gaps back to back, and the second one is a super big one, you would always want the price to inverse that. So now since we are like I said that like I even take entry off of the 1-minute time frame. When it comes to the 1-minute time frame, if I see that draws on liquidity are super strong, I'm willing to take off of the 1-minute inversion. But if I see that draws on liquidity are not super strong, I always wait for a retrace. In this case, what do we have? We inverse this big 1-minute fair value gap over here, and then what do we have? If we did not have this session lows over here, this is London low and Asia low. If we did not have that, I would have wanted to wait for price to actually come and fill into this 1 minute and give us bearish like bearish closure to the downside. And that would have meant like no entry this day for us. But you have to keep in mind that this sell off means something, guys. When this happens, when we have a super like strong sell pressure like these over here, that could mean only one thing, that price wants to come and take out the draws and liquidity to the downside. Again, all of that gonna come with the market experience. So you could have entered off of this, boom, we have this 1-minute inversion, big inversion, two inversion fair value gap back to back. Enter, put stop loss above this high, target a 1 to 2, which you could have targeted Asia low. And guess what? You would have still hit your TP. Let's say if you targeted a 1 to 3 restore ratio, you would have actually lost. This is why I say that you could target a 1 to 3 restore ratio, but if you target a 1 to 3 restore ratio, the win rate is going to be a bit less. But you could have at least close some profit off of London low and this low, and maybe move stop loss to break even. So that actually puts us 3 winning days and 1 losing day. So let's see what would have happened on Monday if we backtest the Monday price action too. So we kind of did the whole week. In whole week, we had 4 winning days, sorry, 3 winning days and 1 losing day. So let's just retest the Monday. What would have happened on Monday market open? So this is Monday market open over here. I remember on this Monday I did not take any kind of trade, or maybe I think I did and I lost. Let me just see how this played out. So you guys can clearly see over here what happens. I think this is CPI news. Let's just check if that was off of that CPI. Monday the 15th. Unemployment claims, not that one. So we had PPI Wednesday, Monday. What date was that? Monday the 12th? Yeah. Monday the 12th, there was no news. So this just happened off of no news Monday. This is something crazy, bro. Like, I think this day, bro, if this happened off of the market open, then this clearly means only one thing. We had, like, if we have to identify draws on liquidity on pre-market, when this happened, that means only one thing. We want to take out this high over here, and then we even had these draws on liquidity over here. Sorry, this one is a bit higher than that. Like, this is like, this high was like equal highs up here, almost. You could say relative equal high. We wanted to take out those. This would have been a continuation trade over here for us. Um, Sometimes with market experience, we don't need like draws on liquidity to the downside. But let's say if this would have actually came, like when market open, we had this low. So before market open, I was expecting the price to come take out these lows over here, which was London low, and then push higher. But you guys can clearly see that never happened. We did not take this out, and I talked about this even on my live stream that I wanted these to happen. But you guys can clearly see that we did not take that out and we still went higher. So if you would have, let's say, if you would have wanted to take this trade like on this day, I wouldn't recommend to take it, but you could have taken a continuation trade to this high, but that would have been super risky because price would have still retraced lower over here. So let's just go off of 5 minutes since we take most of our entry off a 5 minute time frame. What do we have over here? Um, this would have meant only one thing, bro. We have this big 5 minute fair value gap over here. In order for us to be bearish, this fair value gap had to be inversed. But you guys can clearly see that, like on this day, we have the fair value gap. We respect that, and then we have another 5 minute fair value gap here. Boom. We respect that. And then like we are actually respecting this fair value gap super strongly. And like to be honest, after not inversing it, like we had one time, two time, three, four, five, six. After coming into this fair value 5 minute fair value gap and not inversing it, that means only one thing. You could have actually entered long to that highs off of like maybe this to be just more, and you could have put stop loss here and just target this high. Now this wouldn't give you a 1 to 2 restore ratio, but if you wanted, you could have went for a 1 to 2, but I would have just targeted this high because we would have potentially like reacted off of that. So again, over here, we take a trade on like there is no draws on liquidity, but we still take it because that just comes off of market experience. I understand draws on liquidity. These are draws on liquidity for the day, and that means the price wants to take that out to be able to push lower. And you guys can see clearly that happened right after that. So that actually puts us like we had 4 winning day and 1 losing day, and you guys clearly see that like two of our trade would have been a 1 to 3 restore ratio. One of it would have been a 1 to 3, a 1 to 2, or a break even, and then this trade would have been close to 1 to 3. So I tell you guys that this strategy that I'm trading off of, like this one over here, but guys, I don't make trading super hard. It's super easy, super simple to use it, and I would 100% recommend that you guys like actually back test it, and you will see the win rate there, and it's super easy to understand it on and also to use it. But again, if you guys don't understand anything from this, just join the Discord. You can ask me there. The Discord is completely free. I'm gonna put a link in the description, and also you can just ask me in the comments. But this is the strategy that I personally use and I trade every single day with.